Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back on, Jim.
Ross, we have people wondering, the election is over, taxpayers out $600 million, and people are wondering if anything will change and improve their dreams of buying a home.
Well, what's going to change is there will be rule changes. So the rules that you have to live by, or the rules that you have to own by, are going to change. So depending upon how those rules are enacted, it's going to have outcomes with how you should own your home, when you should buy it, when you should sell it, and what's going to happen with the housing market. But I think what listeners should understand is that contrary to the MLS benchmark price and the Terranet National Bank HPI continuing to go up, that house prices, or the way that they're being measured, are actually already declining. Obviously, I personally believe that this election was called in order to beat out a recession. That's what I believe, Jim. When we sit back and we look at what's happened with house prices over the since last April, and the way that the nation calculates wealth, which is based on house prices, then you look at the amount of money that has been brought into the Canadian economy by the Bank of Canada. There is no way for the Canadian economy at this time to support that amount of inflow of cash. So what we're going to see is the rules changing that are going to govern the housing market. So the Liberals now have been reelected with a minority, and they're going to need the NDP and the Bloc, or certain members of the NDP and the Bloc, to agree with them to get their policies enacted. That means the Bloc is going to be able to twist arms, and the NDP is going to be able to twist arms, meaning Liberal arms, in order to get the recommendations the Liberal Party has changed somewhat to benefit the talking points that the Bloc or the NDP are after. When we watch the election, we look at it from a salesman's perspective. We believe the Bloc is selling division in this country because the Bloc's purpose is to remove Quebec from Canada. They're doing that by pounding this message of climate change and removing the oil generation capacity, the revenue capacity out of Saskatchewan and Alberta. The Bloc is not stupid. They know if they can create a divide in this country where you impoverish, let's say a province like Alberta, where transfers no longer can flow from Alberta, but maybe need to start to flow from Ontario into Quebec, that there's going to be animosity that's created, and it's going to serve their purpose. Their sole disclosed purpose is to remove Quebec from Canada. We look at this no different than we look at the Chinese when they put out their Red Book. When they put out in writing what their plan is, you should assume that's what their plan is going to be. Your home buying dreams have not improved as a result of this election. The promises or the commitments that were alluded to in the policy from the Liberal Party are not going to be any kind of a solution for the problem that we're in right now. The solution for the problem that we're in right now is a recession, a declining housing market. A declining housing market leads a recession. So the way that we see things, we see the trading cycle leads the business cycle, which in turn leads the economy. When the trading cycle goes negative, the business cycle follows, and the economy follows after that. You're already watching over in China the consequence of running a Ponzi scheme at a national level on housing in China. You're having probably the world's largest builder not able to pay their debts last week or yesterday, missing payments. There's no question the Chinese government is going to have to step in. There is no question that the spending patterns of the people of China who have benefited from vacant cities, up to 5 million, I guess it's more than that now, it's probably closer to 6 million vacant homes that have never been lived in, but they've been flipped from one person to another in a Ponzi scheme, is going to come home to roost. We've been talking about this on the show here for a couple of years. And that also happens in Canada. We are watching right now as home buyers, so you'll notice my wording, home buyers in British Columbia are now spending $25,000 less than they were a couple of months ago. Home buyers in Ontario are now spending $25,000 less than they were a couple of months ago. Home buyers in Alberta are now spending $10,000 less than they were a couple of months ago. Next month, in September, by the time this month is done, the province of Quebec, home buyers will be spending less than they were in August. That's how we measure housing markets. This, as we have said on the show, going back now 2 years, you have never had an opportunity to see this before in real time, nationwide, in every province across Canada, North America wide, in every MLS system across North America, globally. Every housing market that was shut down immediately rebooted mid-cycle and had unprecedented levels of house price inflation be created. This had nothing to do with QE or rule changes or anything else. If that was the case, it wouldn't have been universal across the globe. What you did was you closed off housing market. You had owners of homes who had already sold their existing home and were facing homelessness. Depending upon how long your home trading market was shut down, those people had to rush out and buy when the market reopened. What QE did was it allowed them to buy a more expensive home. The following trade that followed that purchase of a more expensive home caused more house price inflation to happen. And then the final trade happened where more house price inflation happened. And the aggregate house price inflation is reported in what is called the average selling price or the benchmark price, which has nothing to do with house prices. It's measuring the wealth of the buyers that are active buying homes in a month. We've just watched for the first time in Canadian history. May have happened at the Great Depression, Jim. I don't know. I mean, very few people owned homes during the Great Depression. This is the first time in modern history where real estate data has been available, where all provincial markets in Canada are now negative. That has never, ever happened before. I guess a certain part of the irony is that a province like Alberta, where they've had declining sales now, the way that we measure, Alberta, looking at Quebec there, a province like Alberta, where sales continue to increase while home buyers are now beginning to spend less, is something that else has never happened in this country. The reason for that, of course, is the new home construction that's taken place in Calgary. I pour pity those who have made investment decisions in Alberta or Calgary right now for the first time, who don't understand how that housing market functions. So there's a lot of positivity out of this election. So I don't want to leave listeners with a negative thought on this, right? Nobody won the election. 66% of the population didn't have a party win that they voted for. And that doesn't matter even for those who voted Liberal or Conservative, right? 66% of the rest of the Canadian public didn't have luck in this election. But the truth of the matter is these politicians are going to enact policies to try to stave off a great house price correction. That's going to have on the other end tremendous benefits as long as you time the market and you wait to re-enter it. If you want to try to capitalize on their attempts to reboost the market, that's going to be a different situation. You're putting yourself at even more risk than you are buying at peak price, that you have been at buying peak price right now. I hope your listeners understand with what I'm saying. You have every provincial housing market. Home buyers are spending less in September than they were in previous months, all at the same time. That has never happened before. Sales are now declining in in British Columbia, Ontario, and Quebec, but they're rising in Alberta. Imagine the house price illusion created by Vancouver, single detached homes at the national level over the last 16 months is now going to be reversed with Alberta single detached homes. Single detached homes in Alberta are 1/3 of the price that they are in Vancouver. In August, the Canadian Real Estate Association failed to tell the public where home buyers were focused on in the month of August, which was Vancouver and Fraser Valley. That skewed the average price upwards, while the average buyer was actually spending less in all provinces but Quebec, and Quebec is going negative in September. What you need to do is you need to get the answers to your own questions. You need to have a basic understanding of what risk is as you're entering the market and whether or not your family is willing to accept that risk. If you're willing to accept that risk, so be it. The beautiful thing about the last 7 years is the low interest rate environment that we've been in, because many of the mistakes that home buyers have made over these last couple of years are covered up with low interest rates. The pressure to have interest rates rise comes as an economy starts to slow. Bond rating agencies downgrade your debt. We are already seeing the talk is out there. The Canadian Real Estate Association is saying, the housing market has been slowing the last couple of months. Well, we know what follows that. Downgrade of debt. Bank of Canada forced to increase interest rates because of those downgrades, or even the threat of those downgrades. So this election has rolled out exactly as we expected it would. I mean, all of us, pretty much every Canadian expected this outcome. We expected for things to be the same as they were as we went into this election. Only those super politically motivated to try to, with a party bias, believed otherwise. We are walking into a period of over $2 trillion of new Canadian money has been printed as far as we measure Canadian dollars. We believe if you print a dollar by the Bank of Canada or you print a dollar through the MLS HPI, it's the exact same dollar that's been printed. That is what's called wealth, the wealth effect. It's what's driven our economy since 2008. The outcome of this election is exactly what we had all expected. You are not going to see any immediate solutions in the next couple of years. At the earliest, you're 5 to 7 years out. And I will also further add that none of the solutions that were recommended by any of the party included the additional 843,000 backyards currently missing from the country of Canada. They're not willing to put those backyards in. That's the result of this election.
We'll have more with Ross Kay right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, Connor, a listener from Calgary, asks, I'm thinking of buying in Calgary and wondering if I should be taking inflation concerns seriously on a purchase.
Yes, Connor. Yes, 100%. You've got a double whammy in your situation. You're talking about Calgary post-election, and you're talking about inflation post-election. So first, Calgary. The province of Alberta is going to be under the gun as a result of the way this election rolled out. We talked about this in the last section. The Bloc is going to use a leverage of climate change to try to drive a wedge in this country to serve the Bloc's purpose of removing Quebec from the country. It makes no sense that we're importing oil from Saudi Arabia, places where women are treated as second-class citizens, when we have an abundant supply of oil that can be ethically produced here in Canada. That wedge is going to be driven in. That's how we see it anyways. 100% can be wrong, but I'm just saying that's when I listen to those people talk, that's what I hear them saying. I hear the meaning behind their words. As a salesperson, you're trained in listening to the meaning behind the words, or the intent behind the words anyway. So in Calgary, they've had a nice little run. The beautiful thing about Calgary is you can buy a brand new home. So Connor, focus on a brand new home from a builder. Don't look at resales. Don't listen to anyone who's giving you advice to say it's cheaper to buy a resale. Look at a brand new home. Now the other thing is inflation, because we believe inflation is already substantially higher than the 4.1% Statistics Canada is calculating it at. We believe right now inflation is running over 6%. We measure inflation differently than the Statistics Canada does, because we're measuring it ahead of the game. We believe the current methodology for measuring inflation is a latent metric, and it's latent by a few months. We're trying to measure, months in advance, if not a year in advance, if possible. So what that means is this, Connor. Inflation in a housing market has many consequences. One, it covers up a correcting housing market. The beautiful thing about inflation for a homeowner is inflation covers up a correcting housing market. Your house can quietly correct in price the housing market, the home trading market, without anybody even noticing it, just through simple inflation over a long period of time. We went through that in the 1990s here in Ontario. But then you also have to think on the other side about the province of Calgary itself, or excuse me, the city of Calgary itself. How is it going to be transformed over the coming years? The beautiful thing about a brand new house, Connor, is that you're probably not going to have any expenses on that house for the next 12 years. You're buying a home that is probably, maybe you can find it in Calgary. Maybe you can find an R2000 home, a home that burns very little carbon. If not, maybe you can find a builder who's building homes that burn very little carbon. I know as far north as Edmonton, they are building net zero homes in Edmonton. Even on retrofits, they're able to build net zero homes. Because that's the other side of this coin that we're not talking about. The changes that are going to be needed to remediate our housing stock to meet our global climate change target is going to inflate the amount of money needed to be put into the housing stock. Renovation works, remediation, maintenance. It's astronomical. Like when we sit down and look at this, Connor, you're looking at a minimum $50,000 per home. Now you take $50,000 per home, and you can see how the benefit to an economy is. So there's cash coming out of the economy to solve this climate change problem with your residential real estate, but all of that money goes right back into your economy. Because the best dollar that is ever spent is a dollar spent on housing. I'm not talking about house price inflation or house price illusion. I'm talking about housing. A single detached home is the greatest generator of GDP in your country. Locally, at a local level, it is the single greatest generator of GDP that you can build. That GDP will carry on for a 4 to 5 year period by the time it recycles itself through the economy. So inflation, as a result of that alone, is going to increase. Rent controls, Connor, rent controls. If you're in a rent control province where the rent controls are tied to inflation, it means next year, the inflation calculation that is as a result of rents is already going to be at 4%. We're going to end this year at over 4% inflation. That means the rents the following year are going to increase 4%. So that component of inflation next year is already in stone. It's already written because of rent controls. So with that in mind, the beautiful thing about inflation is that it offsets a correcting housing market. You can buy in Calgary in many places with a reasonable profit margin being taken on by the builder. If you can find a builder who's taking a reasonable profit margin, that means you probably can't build the house for anything cheaper. Then you allow inflation to take account over the next 5 to 10 years, and that can offset any major correction. The beautiful thing about home ownership, the beautiful thing about it is, if you buy a $500,000 house, a $500,000 house, odds are 20 years from now, you're going to have $500,000 worth of wealth. If you buy $1 million house, odds are 25 years from now, you're at least going to be a millionaire. At least. That, Connor, is how the answer for your Calgary question should be delivered.
Ross, I know you talk about unethical behavior by realtors, but at least one, I think, wants to go down the right path. We have a question from Daniel, who says he's a realtor from Toronto. He asks, I'm looking to give my clients better guidance on purchasing homes this fall. I know Ross's family built a huge sales business off the Ontario housing bubble of the early 90s. Can Ross give us some ideas on how to guide our clients if he really believes we're now headed down the same road we saw in the 90s?
Well, Daniel, the road is going to be different, and it's going to be traveled differently. So let's make that clear. When the Great Ontario housing correction began in 1989, we were at just below 10% interest rates, 9.75%, and the Bank of Canada raised rates to 12.75%, I believe, which was the trigger. But the housing market had been correcting already from 1987. So the signs were already in the market way back in 1987 that what happened at the end of 1989 was going to happen. We had a 2-year lead time in Ontario. It quickened when the Bank of Canada raised interest rates. You have to remember, a 2% interest rate increase back then is nothing. Is like probably a 0.25% interest rate increase today. With mortgage amortization tables, it's a totally different thing. A 2% increase when rates are 10% is not the same as a 1% increase when rates are at 2%. It's the way the amortization table works. What I would tell you is this: there's two things, Daniel: counseling your client and counseling your own business. Your own business, you should be a listing realtor at this time, okay? Your entire business model should be focused on getting listings and getting those people to sell before they lose money. That should be your total focus. Your buyers, depending on where they are in the property ladder, you still can recommend maybe they buy, as long as they have an understanding of the number of years it's required for them to break even. And you have to be able to communicate that to them. I understand that you're not taught that at real estate school and that your local brokers are not giving that kind of training, but that's really how you have to approach it. If you have to be self-taught, you have to become self-taught. We did. I mean, this was not taught to us in the 80s and 90s. It was generational experience passed on from one generation to another of salespeople. But we were also blessed because the digitization of housing data started in Hamilton, the Realtors Association Hamilton Burlington, in 1987. It was the first real estate board in Canada to have digitized real estate data. So we were very lucky. In your context, you just have to follow the same guiding principles. Do no harm. You should not be doing anything so you earn a commission. If you have to give advice to someone that you even suspect could cost those people money, that is not advice you should be giving them. And I understand the pressure that you can come under when it comes to sales. You've got a mortgage that's due. You got your mortgage broker, your broker wants you to pay your desk fee. You've got your car payment. You've got your taxes. You've got everything else that's all coming due. I understand the pressure that you're under. But you have to have the guiding principle that you are going to do no harm to your clients. The easiest way to do that is to focus on sale. Focus on listing properties for sale. If that means you have to cut your commission to get those listings, do it. Because it's going to be an okay sell. Let another realtor sell your listing. Because 2 to 3 years down the road, those realtors will have no business because they have lost the business of the future from those people that they convinced to buy a house. The selling realtor always wins. The selling realtor has a long business model before them. And all of those people who buy houses that you have listed, inevitably, who feel screwed over by the real estate agent, will come back with you when they want to trade up years later because they see that they don't see you with the same jaded viewpoint they had with the realtor who got them into a mistake. There's a reason why, Daniel, in the real estate business, repeat sales are less than 3%. Less than 3% of the transactions that take place in Canada are repeat sales to this same realtor. Less than 3%. There's a reason why that happens. The reason why is because the consumer is a smart person. They see, through owning a home, through a few years, the consequence of the decision that they made. And if it was a bad decision, they look for someone to blame. And if the real estate agent didn't give them good advice, they will blame the real estate agent. And then when you do a good job for someone, especially on the listing side, as a housing market is correcting, as I said earlier in the show, every province now, home buyers are now spending less than they were a couple of months ago. When I say that, Daniel, this is not how your local real estate board measures house prices, okay? This is not how what you would have ever been taught to get your real estate license would have shown you. We measure housing markets differently. That's why we have such a huge lead time on what's going on. So when you months later, when you hear house prices are correcting, remember, let me word it to you this way, Daniel. Next January the 15th, after 9 months of home buyers paying less and less and less for homes, the Canadian Real Estate Association is going to announce that the average price increased by over 10%, probably around 14% in 2021. So even though house prices have been falling for 9 months, they're going to come out and put positive spin on it. This is the opportunity where you have to step forward with your clients. Tell them the truth. Explain to them what's going on in the market. You need to understand how to be able to explain it, but focus on listings. I don't think you should be encouraging anyone right now except for someone really well off, someone who knowingly is willing to take on the risk to be a home buyer. You simply have to wait till the timing's right, Daniel, and they're going to buy a house anyway. So they are going to buy a house anyway. They're going to trade up the property ladder anyway, sooner than later. All you have to do is earn their trust and wait. And then your big commission payout is going to happen. So that's how I would have to answer that question.
Ross, thank you so much for chatting with us.
And thanks for having me back on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, he's more than willing to answer them if you send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.